And amid the pandemic, what will boost investors' sentiments? How will the country's economy perform in this challenging period? We will also discuss what it takes to move forward and strengthen the economy. All this now on Money Matters. Hello there, welcome to Money Matters with me, Tamina Kausji. Now, the COVID-19 pandemic has severely affected the global economy and financial markets. As the race for a vaccine continues, proactive actions are required to protect economic prosperity. Today, we welcome Gerald Ambrose, Chief Executive Officer of Aberdeen Standard Investments, to Money Matters. Hello, Gerald. Welcome to the show. How are you doing?
Hi, Tamina. It's nice to be here. Thank you for inviting me.
Fantastic to have some of your time. So, Gerald, let's get the ball rolling by having a look at the current situation in Malaysia, pandemic or not. Now, of course, due to financial constraints, Malaysia needs to encourage private consumption. Let's talk about how we can go about this in a much more structured manner.
Right. Well, I suppose Malaysia's been better than a lot of our ASEAN neighbours in being proactive and making sure the economy doesn't completely grind to a halt. We had the Prihatin measures that at least gave people some money upon which to live. And, Malaysia also, unlike other ASEAN countries or some other ASEAN countries, has got quite a high savings rate through KWSP or the EPF. So there was more flexibility given for people maybe to withdraw money from KWSP as well. So life has gone on relatively well. I mean, I'm in the financial services industry.
That's right.
And I'm surprised how, capital markets, fund managers, brokers, banks were able to function working from home, or with a large proportion of their population working from home.
Yeah, absolutely. I'll go a little bit deeper into that in just a little bit. But first, let's talk a little about the solid fundamentals that Malaysia does have, which has actually allowed us to stay on this path. Fiscal resilience together with a diversified economic structure. Your thoughts on this?
Well, I think we are probably more diversified than most. We have a petrochemical industry, we have, the normal utility industry, we have an agricultural sector, and we have quite a sophisticated manufacturing sector, particularly in the information technology and the technology sector generally. So one of the benefits is that demand for our products, both palm oil and downstream, rubber, latex and downstream, as well as electronic products, which are mainly components that go to the larger people that manufacture mobile phones, etc., and 5G. The demand has been really quite healthy. And the other thing is that the slowdown in demand from areas that have been hit quite hard by COVID, like Europe, UK,
Correct.
US, has been offset by the recovery in China. And China is increasingly the most important export market for Malaysian products, as well as ASEAN itself. So
that's right.
That's the positive. We're diversified, and we've got some areas that have actually been net beneficiaries of
And very quickly,
crisis.
Gerald, before we go off into a quick commercial break, I'd like to ask about overcoming some of the challenges which have been brought about by working from home, particularly when we look at the workforce of Malaysia and labour force participation rate of women, which is already fairly low compared to men, and the added challenges of not just childcare, as well as the gender pay gap, etc.
Well, Malaysia, like the rest of the world, is becoming more service industry oriented. Before COVID struck, great steps had been made to provide high-speed broadband access to a larger chunk of the population of Malaysia, particularly in the hub areas. And, I suppose you're talking about Kuala Lumpur, Johor, Penang.
Correct.
Which enabled life to go on as normal. I suppose one thing that is going to change permanently is, online business, and the fact that you can live at home, and there's a larger population that's involved in the gig economy, delivering things to you, and the logistics from an online order to go through whatever it is that you want to buy through to warehouses, through to transport, to the last mile, is something that I think is here permanently now.
Absolutely. Thanks for that, Gerald. So we're going for a short break now. Find us on Twitter and share your take on coping with the challenges and impacts on productivity while working from home. Welcome back to Money Matters with me, Tamina Kausji. Now, if you're just joining us, we're speaking to Gerald Ambrose, CEO of Aberdeen Standard Investments. Gerald, so moving straight back into now investment opportunities and looking at why Malaysia is still, COVID or not, an attractive investment destination, particularly in the region. Your thoughts on this?
Well, I think one of the key positives for Malaysia is that the central bank has always made sure that individuals can save and not have those savings depleted by inflation. You can get a real return from savings, and inflation at the moment is something crazy, like minus 1.4%, and the return you get from the bank, I think, is around about 2%. The return you get from a Malaysian government security of 10 years duration is about 2.75%. So that's a genuine sort of 4+% return that you're getting from deposits. If you invest in Malaysian equities, the earnings yield is significantly above that. But if you look at the dividend yield for the whole market, it's about 3%, which is superior to others in the region. And you can find a number of companies with strong cash flows, with excess free cash flow that like to pay it back to shareholders. So you can get dividend yields of quite low risk that can give you a return. And I'd say at the moment, I suppose banks are the ones that have been bombed out, you know, with fears of huge provisioning after the loan moratorium ended.
That's right.
And there are some concerns that bad provisions or bad debt will accelerate. Maybe I and a few others are more sanguine about Malaysian non-performing loans, and the fact that the central bank regulates their banks quite regularly, provides the requirement for very high loan loss reserves. So the banking sector, which has been a big underperformer, might benefit. People might start to look at value investments as opposed to growth.
Right.
And what's been doing so well recently has been growth stocks, because growth is so hard to get.
Yeah.
You've seen interest rates all over the world come to pretty close to zero. You've seen GDP react as well. Loan growth here in Malaysia is not far off, 4% when it used to be 10 to 12%. So growth is what people are really after, with as low a risk as possible. And that seems to have come from the rubber glove manufacturers.
Absolutely.
And the electronics manufacturing sector that are in special situations. But as a result, the electronics manufacturing sector's valuation has got pretty steep, much higher than it normally is. But I think you just had to pay a bit of a premium for that growth at the moment.
Absolutely. Now, speaking of paying a premium, though, at the same time, there has been a lot of investment recently by German semiconductor giant. I'm referring to Infineon Technologies, which just in September, Gerald, actually pledged to invest 3.25 billion ringgit over 10 years in Malaysia until 2029. Now, this is in Malacca. Now, these are some positive developments despite the pandemic. How can Malaysia continue ensuring that we make the most of it, especially in the sectors where we traditionally have always attracted heavy investments?
Reduce bureaucracy, in simple terms.
Beautifully
I think
put.
that Malaysia is a very attractive place as far as costs are concerned, in terms of labour costs, in terms of educated labour, in terms of speaking English, in terms of rental value for property. There are a lot of great positives for Malaysia, but quite often you get companies that show an initial interest and don't really follow through and maybe move their money elsewhere. And I think there was an example of Hyundai, which has just invested a lot of money in Jakarta for their automotive manufacturing industry, when their initial investment actually was in Malaysia. So we see that a little bit too much.
Yeah. Absolutely. Now, from there, what options does the country currently have, Gerald, to withstand the impact on liquidity first?
I think that there is plenty of basic liquidity in Malaysia. We don't have the reserve currency status that the United States has, and we don't have the credibility of currency, I think, that a lot of the developed world economies have. So we have to cut our suit according to our cloth. We can't just print money willy-nilly, because it affects the exchange rate of the ringgit against the US dollar. But I think Malaysians are used to this. And it's interesting to note, actually, in the United States that with this crisis, the trade deficit has soared as Americans don't manufacture things so much anymore. They have to import them. Whereas in Malaysia, if there's a crisis, people tend to buy local. They switch from Panasonic to Pensonic sort of thing. So, I think that's one positive for Malaysia.
Fantastic. So from there, very quickly though, let's have a look at how the country can also withstand the impact on income and assets as the pandemic continues to evolve.
Well, on the income front, I suppose employment is a key factor, and it's as clear as mud as to what the outlook is. I thought, and until relatively recently, Malaysia has been handling this coronavirus crisis better than most. I've got children in the United Kingdom, and things are in a pretty chaotic state there.
Right. OK, thank you for that. Now, of course, we take a short breather, and in the meantime, do connect with us on Twitter. Let us know what you think of the discussions so far. Welcome back to Money Matters. We're discussing the country's economy amid the COVID-19 pandemic. Now, let's move on to ways to revitalize the economy. So, Gerald, on that note, tell me a little bit about in planning to anticipate and prepare for changes in consumer needs, behaviors, and preferences. What's going to be need to be done industry-wide?
Well, I think we've had the initial signals that there's been a pickup in industrial production and everybody's now refilling inventories. That's happened. We've had the industry refill. So from now on in, it's very hard to forecast because a lot of it depends upon, whether there's going to be another wave, or whether there'll be a vaccine to this coronavirus and we'll all be okay. But my own personal feeling is that everybody's forecasting 2020 earnings to be lousy after 2019.
Sure.
And the whole thing will recover quite dramatically in 2021. But that is contingent upon really the COVID issue being largely resolved by the end of the year. I'm a little bit worried we've got it for a long time, just like flu.
Yes.
And we're just going to have to learn to live with it. So that adjustment might take a little bit longer. So I can't advise people. I don't know exactly what might happen. But the whole concept of staying locked up for much longer than this year, I think we're going to have to think again and make adjustments to adjust our life around living with this virus.
Yes, make adjustments is right. Now, of course, from there, moving into what is another key component of ensuring that investments and opportunities abide. Good governance is more important than ever during any pandemic. New Zealand's Jacinda Ardern-led government, of course, just won a landslide victory attributed to sound pandemic management. Now, how about tying in confidence levels of global investors to Malaysia's attractiveness and stability, which must, of course, include governance? Your thoughts on this, Gerald?
Well, Aberdeen Standard Investments has always been apart from being a bottom-up stock-picking fund manager, governance has been front and centre ever since we sort of set up 35 years ago. But that now, since the mid-90s, is also, we look very closely at the environmental effect and the social effect of investing. And really, if you're a long-term investor,
sure.
In order to be a long-term investment, something has to be sustainable. So if they have a business model and haven't taken into account the risks that might affect their business as a result of climate change, as a result of disintermediation of labour, then I think they're not going to do as well as those companies that have taken these risks into account. So we believe that, and I think the budget's going to contain some elements to try and get people to think about the long-term sustainability of their investments.
Exactly. We're talking about sustainable living as well as, steering the economy, of course, being two of the four main thrusts of Budget 2021. Anything that in particular that you think will help in industry and investment? Very quickly before we go off.
Well, I think a key thing for Malaysia, and we've seen it, is water shortages, water treatment. We must increase our capacity to handle treated water, so that if there isn't rain for 3 weeks, or if there is a bit of pollution in a river, we're not sort of held hostage by that. That's what I think. So I think some form of sort of water treatment funding would be good.
Fantastic. Thank you so much, Gerald. It's been such a pleasure having you with us on the show. So from there, we move along and, of course, thank you for joining us so much on Money Matters today. Before we go, find us on Twitter and let us know your thoughts about today's discussion. We'll be back next week, of course, with more money insights that matter. Till then, I'm Tamina Kowji. Thanks for watching and stay safe.